off by the look of it, and Harvey Norman weaker at just a shy over $2. Let's get a little bit more of a reaction on today's market at the open. We are joined by Chris Weston from IG Markets in Melbourne. Chris, I just want to start by talking about this 10 deal selling off its I-Corp, indeed going to use the proceeds to sell down debt. It already, with its capital raising, knocked off around $200 million worth of debt. How much further is this going to be enough to put that balance sheet back in a competitive state?
Yeah, I think so. I think 149 was a little bit over what was expected before. I think the original sort of talk that I think beginning of May through to mid-May was that we're going to be 139 million. So, this probably is a slightly better price than what was previously agreed. I mean, let's look at the balance sheet now. I think net debt to EBITDA should fall to around about 1 times, which is significantly lower than where it's been. So this obviously does remove quite a lot of the balance sheet risk. I mean, the other one which is in this space is Seven West Media, and clearly their balance sheet's probably in a slightly worse space than 10. I mean, their net debt to EBITDA after their raising is probably about 2.7, 2.8 times. So depending on the ad market will depend on your view going forward, because with Seven West, you can still get some deterioration, some balance sheet risk. But I think at 1 times, 10's probably removed a lot of that balance sheet risk. It's now about what's going to happen with the programming. It's about the costs and whether they can attract some viewers further down the line. And I think that's really what people are hoping to see further down the line. Shareholders
obviously thinking that perhaps this news coming out of the media space today, a positive or catalyst at least for Seven West and its movements going forward. Shares up 7.6% right now.
Who's that? Seven West?
Seven West.
Okay, yeah, I mean, I think you've also, I think probably part of the reason we've seen what we're seeing with Seven West as well is that Goldman Sachs have upgraded this to a neutral capacity. I think most of the brokers that I'm seeing now are actually relatively positive on Seven West now. I mean, if you think that the net debt, EBITDA is probably likely to drop about 10 to 13% for 2013. You've got to be saying to yourself that's probably factoring in a pretty deteriorating picture in the ad market side of things. It's still got the good programming that we're seeing. It's the #1 rating there. So I think with the TV assets, with very compelling TV assets, the actual analysts are probably encapsulating quite a deterioration in the ad market. At these levels, it's probably quite good buying, and I think the upgrade today from Goldman's has probably solidified that a little bit and encouraged a few people into the stock.
And the positivity coming over the last few days from those corporate earnings out of the US seeming to be quite short-lived as disappointing data from the US sets in once again, and of course those Euro fears, those Spanish bond yields for the 10-year note rising back up to 7%.
Yeah, well, you've got two-way tug of war here. I mean, corporate earnings now, we've seen 110 companies coming out with earnings out of the S&P 500 companies on the quarterly basis. I mean, the aggregate decline in EPS is about 0.5%. I think the market prior to the earnings season was looking for about a 2.1% drop-off. If you look at EPS thus far, we've seen 69% of companies beating, and also 69% of companies beating on the revenue side of things as well. The historical average over the last 12 quarters is about 62%. So again, it feeds into the idea that corporate earnings are in a slightly better shape. The market's got it gone into this slightly positioned a little bit bearish. But I think the thing that you've got to keep your eye on now is what's happening on the euro. The euro is really struggling, and again, I think it really feeds into the argument between the difference between Spanish 10-year bonds and German bunds. Now that relationship, or the spread now, is about 583 basis points. The record level we got on the 18th of June is 589 basis points. So we're not a million miles away from that. So if we continue to see it pushing up, the euro will come under pressure. I think the market will refocus back on that spread again. You can have a look at the Spanish budget minister coming out last night with comments saying that Spain basically doesn't have any more money, and without the ECB bond buying program previously, we would have actually been, we would have probably collapsed. So I think that was a very interesting scenario playing through. We'll probably see the Europeans vote through or signing the memorandum of understanding with the Spanish bailout tonight. But again, Mr. Schäuble's comments to the German finance minister saying that Spain basically the sovereign wears the risk on the Spanish bailout. So that disconnect between the Spanish sovereign and the banks is still very much there as well. So I think the euro still remains very much a sell on strength against the greenback and against the Aussie and against the Kiwi. You're likely to see further lows because that spread is very much in focus again.
All right, Chris Weston, we have to leave it there, unfortunately. Thanks so much. Appreciate it. Have a great weekend.
Thanks, Maura.
Let's talk about sales for goods and services.